Will a Fed rate cut trigger a Bitcoin explosion? Two scenarios diverge at the $97,000 line. Trading results April 28, May 2, 2025. Weekly PL 61.83. A week swayed by a directionless market. Market overview. Japan yen weakness becomes clearer. The Bank of Japan kept policy rates unchanged, but revised down its growth and inflation outlook. The timeline to reach the 2% inflation target was delayed, reinforcing the dovish stance and accelerating yen selling. United States shadow of stagflation. Q1 GDP turned negative, reigniting concerns about a slowdown in the U.S. economy. The non-farm payrolls also missed expectations, triggering temporary dollar selling. O.S. dollar index DXY. While attempting to stabilize, it remains volatile due to erratic statements from the Trump administration and reactions to U.S. data. Europe and the UK growing rate cut expectations. Clear signs of easing inflation are fueling expectations for monetary easing later this year. Bitcoin BTC/USD strong dip buying continues around the $97,000 mark. If the risk-off rate cut expectations narrative holds, a breakout above resistance may be imminent. Trade review. USD/JPY selling into strength around the 144 range, paid off 26 pips. Stayed in a tight and sensitive range ahead of FOMC and jobs data. GBP/USD long position failed, ignoring resistance. Above 1.34 resulted in a 45 pips loss. XAUSD gold long at 3.3 home 5 was stopped out 37.19s. Confusion around interest rate outlook made this a tough market. GBP/JPY exited long at break-even despite yen weakness. Pre-data volatility caused whipsaws. Outlook for the week of May 5. USD/JPY, the key lies in FOMC and Powell's comments. Expect volatility over timing and the number of potential rate cuts up to 4. Also watch for U.S. bond auctions in the Treasury's FX report. EURUSD, the European Commission is expected to propose restarting trade talks. Progress could provide upside delays, could lead to ongoing weakness. GBP/PY, the BOE meeting on May 8th is expected to result in a 0.25% rate cut. Beware of post-event reversal after all news is priced in. CAD/JPY, Canada's jobs data is crucial. A weak report could spark speculation of a 0.5% BOC rate cut. AUD/JPY, direction will depend on weekend general election results. U.S. China trade negotiations also remain a key risk on-off trigger. ZARIPA, focus on VAT reforms and credibility of the new budget. BRICS cooperation and fiscal concerns will also sway sentiment. Economic calendar JST. Date key events. May 67 FOMC meeting, Powell press conference. May 8 BOE rate decision, New Zealand fiscal report. May 9 Canadian jobs report, post-election reaction in Australia. Summary. USD/JPY/US. Event heavy week ahead. Direction unclear, suitable for short-term scalping. USD rebound possible if trade talks progress, but underlying tone remains weak. GBP/JPY watch for reversal as a rate cut is already priced in. CAD/JPY mixed signals from data and diplomacy could lead to instability. AUD/JPY possible turbulence depending on election results and China relations. ZAR/JP limited upside unless fiscal reforms are credible. Afterward, stop the wrinkles before they deepen, just like charts. This week, the market wavered Trump's surprise call to reintroduce a 10% tariff sparked risk-off sentiment only for equities to quietly rebound. USD/JPY turned into a battleground between the tariffs yen strength crowd and the America is strong by the dollar camp. With both charts and wrinkles, waiting too long can be fatal. 8 wrinkle prevention strategies for your face in the market. 1. Sunscreen stop loss. Even the best-looking trade can get scorched by UV rays' unexpected risks. Protect your positions and skin with SPF 50 level stop losses. 2. Retinoids counter trend adjustments. Retinoids reverse your skin's downtrend, just like the 61.8% Fibonacci retracement line on your chart. For your skin tretinoin, for your chart key levels. 3. Moisturizer capital management. A dry account and dry skin both crack under pressure. Avoid over-leverage like you'd avoid dehydration. Ample liquidity, radiant complexion. 4. Hydration chart check frequency. If you listen when someone says drink water, you'll also know when to buy dip. Dehydration, lack of info, panic buying, stop out. Keep sipping news and liquidity. 5. Nutrition fundamentals. A vitamin-rich diet is like a fundamentally sound trade. Vibes-based buying is like living off junk food. The result is the same, wrinkles and drawdowns. 6. Sleeping position trading posture. Side sleeping leads to wrinkles. Just like unbalanced positions, wrinkle your account. Balance risk-reward, exposure, and your sleep schedule. 7. Smoking meaningless entries. Just as smoking accelerates aging, meaningless trades quietly age your capital. Watch out for short-term gambling addiction. 8. Unconscious habits, trading habits. Unconscious frowns cause facial wrinkles. Unconscious high buying leads to stop-out pain. Know your habits. Pattern recognition is a shared skill between skincare and trading. In summary, resilient traders have resilient skin, whether it's your skin or your charts. You can always turn things around by switching time frames. This week was rough, but let's treat our trades and our skin gently and bounce back with clarity next week. Even if tariff risk emerges, stay calm and process the info rationally. Don't jump in on reflex. Keep your account and skin hydrated. To trade beautifully, that's the true trader's path.